What is going on, everybody? Billy here from Storm Trades with another trade review. Today we're going to run through a long trade on NQ that I missed. That would have hit for a 2R win on Wednesday, August 20th during the New York AM trading session. I had a bearish daily bias on this day, and initially had a bullish bullish narrative on the hourly time frame. But once we hit a daily bearish target after the cash open dump at 9:30, I saw a really nice reversal opportunity when reviewing NQ for the day. So I just wanted to go over it and let's see if we can learn something from this. Let's get right into it. On the chart is the last four daily candles. I'm trying to get a sense for narrative on the daily to sort of get a daily bias, and sort of was easy for me today to do that. First things first, mark off the previous daily low. We've already swept that. Interesting. Doesn't provide us with a lot of information. Here's the previous daily high. We actually had a very strong candle close. Tuesday's candle finished extremely bearish, right? And so if you're reading candle structure the way T-Trades talks about it, right, we would expect price to respect the midpoint of the previous daily candle, right? So we would expect price to respect this point right here, and in fact, we would be looking for price to open, make some sort of a high inside of this area, and then close lower. All right, now, do we have any external or internal range liquidity to target? We do. Okay, it's down here. Okay, we have a swing low. This is a daily swing low. Okay, this is our ultimate target. Now, I didn't think we'd get there today, but it just goes to show you what kind of a cash open move we had. So a swing low down here, this is the ultimate target. I'm expecting lower prices, and I'm moving on to the hourly time frame. Now on the hourly time frame, I am looking for, I'm primarily looking for the most recent change in a state of delivery, as I believe that tells us a large story. Okay, as we could see, we've got the last 1, 2, 3, and then this is the fourth day of these are bearish candles, right? And you can see that. Okay, so ever since last week, we've been bearish, right? And I'm expecting us to continue to be bearish. However, okay, we have a change in the state of delivery after a sweep of some liquidity right here. We have a change in the state of delivery, and this is confirmed by the presence of this fair value gap, which we dipped into, okay, found support from, and have moved higher from there. So when I see a clear change in the state of delivery, even though the daily is saying we should be going lower, the hourly to me was telling me to go higher. This is why I never got involved in a trade. But frankly, I took my eye off the ball. Once we reached the daily target, it's clear that there was a very good reversal trade to be had. So that's what we're going to review. My expectation here was that price would come down, sweep some liquidity inside of this fair value gap perhaps again, and move higher. Okay, based upon the hourly time frame analysis. Okay, now that said, I had an invalidation. Okay, that if we came down and we closed through this fair value gap, okay, that we would be invalidated this idea, and when we would start resuming our trading lower. And I was fully expecting, if that happened, to be able to get in on sides with a trade lower, and then that would put me in line with my daily bias. Something that I want to take note of. Okay, we have an interesting thing here. We're sandwiched in between two internal range liquidities. When I'm starting to trade this, right, I'm just looking at the 8 o'clock candle here, right? It's when I'm doing my analysis, right? I'm going to wait till 9:30 open to trade indices. That's just me. Some people could have taken an earlier trade for a very large win if they moved, if they got on sides with a short prior to the cash open. So anyway, we're basically sandwiched in between two fair value gaps here. I don't like when that happens. Not a big fan. It's sort of like a neutral bias for me. I didn't really recognize that truthfully until I started to review this trade. So I just didn't love price action, given that my hourly time frame analysis was sort of reverse of my daily bias, and the daily bias to me looked very clear. All right, I'm going to move price forward here, and boom, this is the cash open. Okay, look at this. This is incredible. Now, something I want to make note of. You know how I love the 1/3 ADR levels. If you can see here, okay, we moved into this bearish hourly fair value gap. We engaged with the bullish 1/3 ADR, okay, or the buy side 1/3 ADR. We then closed, okay, and look how we just destroyed this hourly fair value gap. Okay, so now this is it was a liquidity rate here. Okay, let me show you where I would have had my invalidation, right here at this fair value gap. We clearly invalidated that, and we also we made that move after sweeping the 1/3 ADR, and here we've blown right through the sell side. When we do that, okay, the next logical spot is the full average daily range. Very rarely do we hit that. It's only on massive move days, right? This is where, going back and reviewing this trade, I understood where there was a really nice reversal setup. If we reach the 1/3 ADR, or excuse me, that's one thing. If we reach the full ADR, that's a whole nother ball of wax. And if we did that after sweeping, okay, this swing low, which is our very high time frame target, that's a great place to find a reversal trade. So going to pull the next trade, or excuse me, and I'm just going to make note here. This is a high time frame target. I'm going to move the next hourly candle, and would you look at that? We came down, we closed, and we had a rather small wick, okay, close at the swing low right here. That's our ultimate target. When we hit a high time frame target, it is perfectly normal and okay to start looking for clear reversal setups from there. Okay, we would expect a lot of liquidity here at a swing low, a daily swing low. So right now, I would move to the M5 time frame. Okay, and I would be looking for a clear change in the state of delivery. Okay, we already took this liquidity here, right? This was a swing low, a daily swing low. We have ran the 1/3 ADR and the full average daily range. Okay, all that means is that we're extremely extended based upon historical data. So extremely extended is a very good place to find support for an idea to move back into the range. Now I'm going to mark off these series of down close candles here that took the liquidity and see, okay, going to watch and see if we have a strong close through them, creating some sort of a fair value gap on the way up, which would confirm, okay, this change in the state of delivery. And let's go here on the next two candles, and right there, all right, this is exactly what I want to see when we're going to make a reversal. We have a fair value gap here that is not even close to becoming tagged. The very next candle is even more bullish as we come through the series of down close candles that took the swing low liquidity. Okay, see this? That is beautiful. So I'm going to draw out a fib from the swing high, the swing low to the swing high. See, do we have any liquidity that matches up with the 1.1 to 1.5 standard deviation and the -2 to -2.5? Okay, we do. We have a swing high here in between this in this area. Okay, this is a I'll call this minor buy side, and we also have a large fair value gap up here. Okay, where we have the -2 to -2.5 ultimate target. We're extremely extended down, so it's very possible that our retracement brings us back up here, at least take the minor buy side, but also to engage with this unmitigated M5 time fair value gap. So I'm going to put a market order right here. I put the stop at a swing low, and I estimated it. I just wanted to go to the midpoint of this fair value gap, okay, and see what happens. Okay, and I didn't take this trade. This is me going through the pairs that I trade every day. I suggest you do the same thing. It's a great way to learn and find things that you may not have noticed before. Okay. So here I'm going to put a buy order here, stop loss below the swing low. If this is the low of the, this is going to be the low of the day, then I do not expect price to come back down here. Obviously, take profit up here at the midpoint of this unmitigated M5 fair value gap. Let me move price forward, and we move to the minor buy side. We can expect price to retrace around the -1 to -1.5 standard deviation. We actually came up and tagged the -2 here, small retracement, and there we go. So again, and look how we come up here and tag the midpoint and start to come down. So cool trade. It made sense logically. We hit a high time frame target. I didn't take this trade, but I wish I would have. Anyway, you guys have a great day. I appreciate anybody who watches these videos, especially if they watch them all the way through. I can't stand my voice. I don't know how anybody else can, but it's neither here nor there. I appreciate anybody who subscribes, likes, makes a comment on these videos. Thank you.